Welcome back to Entrepreneurial Edge. Today we're diving deep into the mind of one of the greatest investors of all time, Warren Buffett. You know him, you've heard his name, and his net worth is basically a meme at this point. But what truly sets him apart isn't just his billions, it's his mindset, a mindset that we can all learn from. Over the course of this video, we're going to break down the habits and principles that have led him to such incredible success. We're talking actionable advice you can implement today to start building your own path to financial freedom. So, if you're ready to level up your financial game, hit that like button, subscribe to the channel for more content like this, and let's get started. All right, let's be real for a second. We all have those little financial habits that we know aren't doing us any favors, right? Like that daily latte that adds up to hundreds over a year, or that impulse Amazon purchase we regret later. Warren Buffett's philosophy on wealth building starts with addressing these habits head-on. Replace detrimental habits with positive ones, emphasizing discipline and consistency. It's about small, consistent changes that add up over time. Identify one or two bad financial habits you want to tackle. Maybe it's cutting back on unnecessary spending or setting up a budget. Replace those habits with positive ones. Remember, Rome wasn't built in a day, and neither is a fortune. Ever heard the phrase "time is money"? Warren Buffett lives by it, changing how he views spending. Most people think, "Can I afford this?" Buffett asks, "How many hours of my life did it take to earn this money?" Let's say you make $30 an hour. That new phone for $1,200? That's 40 hours of your life, a full week of work. Suddenly, that impulse buy doesn't seem so appealing. This approach makes you mindful of spending and prioritizing what matters. It's about valuing your time and investing it wisely. Let's talk about something that keeps most people up at night: inflation. It's that silent thief in the night, slowly eating away at the value of your hard-earned cash. See, if your money isn't growing at a rate that outpaces inflation, you're essentially losing money just by holding on to it. That's where investing comes in. Warren Buffett is a firm believer in putting your money to work, and it's a cornerstone of his wealth-building strategy. He famously said, "The best thing money can do is make more money," and he means it. Now, I get it. Investing can seem intimidating, especially for beginners. But here's the deal. You don't need to be a Wall Street whiz to get started. Buffett's advice is to start small and focus on understanding the fundamentals. Begin by educating yourself about different investment vehicles like index funds or ETFs, which offer diversification and long-term growth potential. Remember, investing is a marathon, not a sprint. It's about consistently putting money away, even small amounts, and letting the power of compound interest work its magic over time. Leverage unusual conditions. One of the things that sets Warren Buffett apart is his ability to see opportunity where others see chaos. He's not afraid to go against the grain and make bold moves, especially during times of market uncertainty. Remember the 2008 financial crisis? While everyone else was panicking, Buffett was busy buying up undervalued assets, turning a time of crisis into a period of significant growth for his portfolio. Now, I'm not saying you should go out and start making risky bets, but what we can learn from Buffett is the importance of thinking outside the box and not being afraid to capitalize on unique opportunities. This could mean investing in a sector that's temporarily out of favor, but has long-term potential, or simply being patient and waiting for the right moment to strike. The key is to do your research, trust your gut, and be prepared to act decisively when opportunity knocks. As Buffett says, be fearful when others are greedy, and greedy when others are fearful. Prioritize personal development. Here's the thing about building wealth. It's not just about the numbers. It's about constantly investing in yourself. Warren Buffett is a voracious reader, known for devouring books, newspapers, and financial statements. He understands that knowledge is power, and the more you learn, the better equipped you are to make informed financial decisions. But personal development goes beyond just reading. It's about actively seeking out opportunities to expand your skill set, whether it's taking online courses, attending industry events, or even just having conversations with people who are more knowledgeable than you. Remember, the more valuable you make yourself, the more earning potential you unlock. This could mean negotiating a higher salary, landing a better job, or even starting your own business. Never underestimate the power of investing in yourself. It's a lifelong journey that pays dividends for years to come. Avoid debt traps, the silent wealth killer. Let's talk about one of the biggest obstacles to financial freedom: debt. Warren Buffett has famously avoided debt throughout his career, and for good reason. High-interest debt, like credit card balances, can quickly snowball and eat away at your income, making it significantly harder to build wealth. Now, I understand that sometimes debt is unavoidable, like a mortgage or a student loan, but it's about being mindful of the debt you take on and making sure it's serving you, not the other way around. Buffett's philosophy is simple. If you can't afford to pay for something in cash, you probably can't afford it. This means resisting the urge to overspend on credit cards and avoiding unnecessary loans. Instead, focus on building a solid financial foundation by saving up for big purchases and living within your means. Remember, the less debt you have, the more financial freedom you enjoy. One of the biggest misconceptions about wealth is that it's all about fancy cars, designer clothes, and extravagant vacations. But if you take a closer look at Warren Buffett's life, you'll notice something interesting. He lives a surprisingly frugal lifestyle. He still resides in the same house he bought in 1958 for $31,500, enjoys simple pleasures like McDonald's hamburgers, and doesn't feel the need to impress others with material possessions. This isn't about depriving yourself. It's about being mindful of your spending and focusing on what truly brings you joy. Instead of chasing the latest gadgets or designer labels, prioritize experiences, relationships, and personal growth. Remember, true wealth isn't measured by the things you own, but by the freedom you have to live a life on your own terms. Monitor subscriptions and hidden costs. We live in a world of subscription services. From streaming platforms to meal kits to software subscriptions, it's easy to lose track of where your money is going each month. These small recurring charges might seem insignificant individually, but they can add up to a significant expense over time. That's why it's crucial to regularly review your bank statements and identify any unnecessary or forgotten subscriptions. Are you really using that gym membership you signed up for months ago? Are you still watching all those streaming services? By being vigilant about your spending habits, you can plug those financial leaks and free up more cash flow to invest in your future. Buy used over new. Let's be real, cars are notorious for depreciating in value the second you drive them off the lot. Warren Buffett understands this, and he's a big advocate for buying used cars instead of new ones. Why? Because you're letting someone else take the biggest depreciation hit, saving yourself thousands of dollars in the process. And this principle extends beyond just cars. Think about furniture, electronics, or even clothing. Often you can find gently used items in excellent condition for a fraction of the price of new ones. This approach allows you to enjoy quality goods without breaking the bank, freeing up more capital to invest in assets that appreciate over time. Think long-term. The power of patience in investing. In a world of instant gratification, it's easy to get caught up in the allure of quick profits and get-rich-quick schemes. But Warren Buffett's investment philosophy is all about playing the long game. He's known for his patience, discipline, and unwavering belief in the power of compound interest. He doesn't chase short-term market fluctuations. He focuses on identifying undervalued companies with strong fundamentals and holding on to them for years, even decades. This long-term perspective allows him to ride out market volatility and reap the rewards of his investments over time. Remember, building wealth is a marathon, not a sprint. It's about making smart, informed decisions and having the patience to let your investments grow over time. As Buffett famously said, "Someone's sitting in the shade today because someone planted a tree a long time ago." That's it for today's deep dive into the financial wisdom of Warren Buffett. Remember, building wealth isn't about luck or hitting the jackpot. It's about cultivating disciplined habits, making smart spending choices, and investing in yourself and your future. It's about thinking long-term and not being afraid to go against the grain. If you enjoyed this video and found these principles valuable, hit that like button, subscribe to the channel for more content like this, and don't forget to hit the notification bell so you never miss an upload. Until next time, keep learning, keep growing, and keep building your path to financial freedom.